Okay, if you live in India, you definitely know ITC. But here's the thing. What you think you know is probably just a tiny piece of a massive, really complex, and honestly, an absolutely fascinating story. So let's dive in, because this is the story of how one company basically became a part of, well, almost everything in the Indian economy. It all starts somewhere familiar, probably right in your own kitchen. You've got Ashirvad atta, dals, spices. I mean, these are staples in millions of homes. ITC has built this incredible portfolio of brands that have just woven themselves into the daily fabric of life in India. But trust me, this is just the surface. To get your head around the sheer scale we're talking about, just look at this number. The annual consumer spending on ITC's 25-plus brands is nearly 32,500 crore rupees. That is a staggering amount of money, and it shows you what a powerhouse their non-cigarette business has truly become. So how does a company build an empire this huge, stretching all the way from wheat flour to luxury hotels to paperboards? And maybe more importantly, how do they keep it all running? That's the real story here, and it's basically a masterclass in corporate strategy. You know, to really understand where ITC is headed, we have to look at its most recent and a really significant strategic move, the demerger of its iconic hotels business. This is a huge moment for the company, a real turning point. So what on earth is a demerger? Well, to put it simply, it's when a large company decides to spin off one of its divisions into a brand new, separate company that's also listed on the stock market. It's kind of like a corporate separation. And that is exactly what's happening here. The hotel business is becoming its own thing, ITC Hotels Limited. And the way they're structuring this deal is pretty fascinating. ITC, the parent company, is going to hold on to a 40% stake, while the other 60% gets distributed directly to all of its existing shareholders. So why go through all this trouble? Well, the strategy has a few key parts. It's about unlocking value for their shareholders, and it gives each company, the main ITC and the new hotels company, a much sharper operational focus. This split also cleans up the financial metrics, making the new hotel business a much more attractive, pure-play investment for anyone looking to bet on hospitality. Now it can go head-to-head with giants like the Taj or the Oberoi Group. But this brings up an even bigger question, right? How did a company that was founded on tobacco get into the hotel business in the first place? And not just hotels, but everything else? To answer that, we've got to zoom out and look at its incredible transformation. The company's own history kind of tells the story of its strategy. It started way back in 1910 as the Imperial Tobacco Company. But the name changes? Those are the real clues. In 1974, it became ITC Limited, and they deliberately dropped the word tobacco from the name. That was a huge signal that a new era of diversification was beginning, starting with hotels. Then, in the 2000s, it just launched an all-out blitz into the consumer goods space that we all know today. And here's where we see one of their masterstrokes, what's called backward integration. Their huge agribusiness, which works with over 1.5 million farmers, isn't just some separate thing. No, it's a strategic supplier, pumping high-quality raw materials directly into their foods division. This gives them this incredible control over quality and cost, a massive competitive advantage against rivals who don't own their supply chains this deeply. So how did ITC fund this incredible, decades-long expansion into so many different industries? Well, the answer lies in the financial engine right at the heart of the company. And, well, it's a bit of a conundrum. This chart right here, it reveals the core financial reality of ITC. When you look at PBIT, that's profit before interest and tax, one segment just completely dominates everything else, the cigarette business. All the other businesses, they're much, much smaller slices of that profit pie. This table makes the point even clearer. Just look at FMCG, others. That's all your Ashirvad, Bingo, and Sunfeast. It generates a massive 20,956 crores in revenue, but its profit, just over 2,000 crores. Now, why is that? Well, because in that space, they're in a brutal dogfight with established giants like Hindustan Unilever, Nestle, and Britannia, and that keeps margins super tight. Now compare that to the cigarette business. Its profit is almost 18,000 crores. The profitability is just in a different league entirely. So this really lays out their fundamental two-part strategy. The legacy cigarette business acts as the cash engine, just pumping out immense, predictable profits. That cash is then reinvested to build and scale up the growth businesses of the future, the FMCG, hotels, and agri divisions. See, one funds the other. So all of this brings us to the company's vision for the future. They call it ITC Next. And it's a strategy to build a future-ready company that's way less reliant on its traditional core business. And the vision itself is crystal clear. Go all in on consumer goods. The goal is to rapidly scale up these FMCG businesses to a point where they can stand on their own 2 feet as the main driver of the company's growth and really truly take the fight to the market leaders. But ITC's vision isn't just about profits. It's also about sustainability, and this is a commitment they've backed up with an incredible track record. Take this number. For 22 consecutive years, the company has been water positive. That means they replenish more fresh water through things like rainwater harvesting than their entire operation consumes. That is a truly remarkable feat for an industrial giant. And it keeps going. For 19 years, they've been carbon positive. They actually sequester more carbon dioxide through their huge forestry and agricultural programs than their entire value chain emits. I mean, in an era of intense climate scrutiny, that's an almost unheard of achievement. And finally, for 17 years, they've been solid waste recycling positive, which means they manage more waste than they even generate. You see, this isn't just some recent PR move. This long-standing commitment to the triple bottom line, people, planet, and profit, is now a core part of their modern identity. And this all stems from their guiding philosophy, nation first, sab sat bade, which means nation first, we all progress together. It's a motto that directly ties their corporate goals to the goal of creating value for Indian society as a whole. Which leaves us with the big defining question for ITC's future. The company is investing huge amounts of money, it's strategically demerging parts of its business, and it's built this portfolio of incredible brands. But with its financial engine still so deeply rooted in its legacy business, can it successfully complete this transformation? Can it finally shed its reputation among investors as just a slow-moving dividend stock and be seen, first and foremost, as India's next great FMCG giant? That is the journey we're all going to be watching.